Hello everyone, this is Sunil Manjana from Stock Elixir. Today we going to discuss about Yesbank FPO. Before going to the Yesbank FPO, I want to make you understand what is IPO. What is IPO? IPO is a initial public offering. A unlisted company wants to raise the capital or diversification of their businesses. It will register a regulator of stock exchange and company will fulfill its requirements of a regulator. The price of the stock will be fixed by underwriters. So company will issue the share to retail investors as well as institutional investors. It's a high risk oriented because the books of accounts released by the unlisted company, it might be misappropriated to trap the investors, but investors will keep faith in companies and you will apply for IPO. And coming to the part of FPO, FPO is a follow-on public offering. If a company wants to reduce its debts and also to meet the day-to-day businesses, so company will raise FPO, but it's a low risk oriented. Already investors have seen performance of the company in quarterly as well as year wise basis. If he is satisfied with this company policies and books of accounts, definitely he will apply FPO. So now we'll move on to Yesbank. Yesbank was started in 2004 and founded by Ashok Kapoor and Rana Kapoor. In June 2018, the Yesbank was fallen under the radar of CBI. They revealed that Yesbank has given a loan to NBSE corporate companies and its retailer investors. This most of these companies were having lot of bad loans, but Yesbank provided loan to them. So Yesbank not able to recover loans. Next, we'll move on to fundamental analysis of Yesbanks, how recently performed. Coming to this consolidated quarter results, we have 9 quarterly results here. So coming to the revenue, this thing so we can observe here in June 2018 till March 2000, there is a very good moment. I think a little bit dip in June 2019 and see here you can see the little bit, and after that one more dip in September 2019, and there is a massive dip in December 2019 and March 2020. Okay, there is no reduction in interest expenses. See here we can observe here the expenses are going like a hell here. See in March 2019. Okay, so again it has been reduced here in June 2019 and September. December around 26 26 498 crores. Expenses, you can see a lot of expenses are grown like hell. See here, so March 2019 it has got doubled digit here, 5403 5403 crores. So and June and September is less because and there is no consistent the expense like that. There's no consistent. In December, see at 26,498 crores. So coming to this financial profit, I think it has gained in June and in December. After that, all its values were negative. Okay, so in part in other income, uh, another income has made to that has made to show the positive for profit before tax, that has made a positive. See here we can, so there is a drop in March 2019, this profit before tax, and in December also there is a negative. Okay, and net profit, coming to this, after deducting the tax, net profit as there is no consistent net profit also. There is a dip in C, minus the 1508 crores in month of March. So again 18,516 crores dip. Coming to the profit and loss account, we have 7 years of books of accounts. The revenue has grown. We can observe the revenue has grown well till March 2019, and 2020 we can see there is a little bit of dip in 2020. See, we can observe here the interest also growing like hell here. Interest part, uh, year to year wise, the interest is growing. We are not able to see any uh, reduction in interest. So expenses are, there is no reduction in expenses. Okay, so the business has been profit. Okay, but it is not in the consistent, but up to till 2018, okay, the financial profit has company has managed somehow. Coming to the March, it is in the minus, it's in the minus around 2021 crores. So last May to around May 2020, around there is a more dip in May 2020, 32 crores 794. So coming to this, all other incomes have grown, year wise it has grown. So, and net profit, okay, after the deducting the tax, employment, uh, see EPS, we can say observe EPS. Okay, EPS is grown very goodly, very good. See, 7 8.6692 to 11.62 14 up to up to 2008 is up to 2008. It has shown very positive EPS. After 2000, there is a dip 7.38, and it now it is in after the March, it's in minus 69.11. So uh, compound sales, it is in minus, and compounded profit also it's in minus. So all in return on equity 3 years back was 13.63. Now it is around last year it was 6.49. So coming to the balance sheet, okay, the share capital is growing, so there is no any consistently growing. Reserve is also okay, up to the mark is okay. Reserves, see, borrowings are growing like hell. In other liabilities also, it not shows any good sign. There is no reduction at all. So come to the fixed assets, some part okay, this fixed assets is okay with see some 218 crore, 277. Okay, it consistently it's maintaining its fixed assets. Investments also some part okay, and other assets it's going well. It has maintained very good set. So we'll move on to consolidated cash flow. See, cash operating this, for in we have 8 years of cash flow statement. So some part, what are the operating, what I have then in operating, there is, see the loan and advances. We can see here, we can observe here loan and advances, it's the company has taken more loans, that is growing massively here. Operating investments, so there is between 2013-14 some investments happen. After that it has come it has came in the less operating investments. So again 2018 and 19 some operating investments taken well. Deposits also, okay, some part deposits a working capital changes means a current assets minus current liabilities. If it's in the positive value, that shows there is a working capital is growing in a company. That is a good sign for the company. Working capital, there is minus in part of 2014, I think 2014 it has grown. 14, okay, it is in minus. Working capital 2014 is in a positive. So again this see, we can see there is lost 19 and 20, there is compared to the previous years there is a lot of variations. Okay, so 27,699 crores and 30,602 crores. Okay, and coming to this cash from investment activity. Okay, the fixed assets they are maintained well. Investments also they maintained good. Other investments, they will see here in investment activity. First 2 years there is a lot of positive. After that there is no investments. There is no consistent cash from financial activity. Proceed from shares. So there is no consistent proceed from borrowings. They first they have settled the in the first year 2013. They maintained, they paid their debts. There is after that there is no clearance at all. Paid dividends. Okay, other financial activities. Overall so cash flow statement. The cash flow statement, overall cash flow statement, it's overall okay. Before applying FPO, make sure that is it worthful to build our portfolio. Please take care of yourself. Please share our video and like our video. Thank you.